Day traders, Raghee here. We're following up on some of the conversations that we've been having in Charts and Coffee and in the trading rooms, as well as here in these videos. And that is the down trends that are still intact on the NASDAQ and on the Russell. So let's take a deep dive into those, starting with the daily time frame. We've talked quite a bit about structure before strategy. And while, yes, we had a quick 2-day rally that took the NASDAQ into the resistance of the wave, really nice Darvis levels overhead. Overall, a very quick shift to a neutral market is not enough to create an uptrend. It corrected the downtrend, and in that correction is the opportunity, right in this 15,000 area. Quite frankly, anywhere between 14,920 to 15,340. That entire zone becomes a shortable zone for expectation back down. And now that most of you either have been following this trade we've been talking about, the next question comes up is, what's my downside target? So let's keep an eye on 14,485. There's been support there in the past. It's the 50% retracement of the current high to low range. Now let's jump on over to the Russell, because the Russell has been a little bit more volatile. Let's talk about why the Russell might be a little bit more volatile. Small cap stocks tend to be a little bit more resilient in an environment of a strong dollar. And we're going to see a stronger dollar as the expectations for at least 3/4 point hikes are priced in for the March, May, and June FOMC meetings. Yes, we rallied pretty strongly into the zone, but here's where it gets interesting. When you know where that zone is, and how do we know where it is? We've got Darvis right here, as well as right in here, and then another level right in here. Okay, beautiful. We have the wave swooping down, and even better than the NASDAQ, we have continued to trade in that bearish momentum, bearish trend. This, my friends, is short the rip, and this is what it looks like. Shorting the rip is not always easy. Shorting the rip can be tricky because you're going to be selling into strength. But if you trust the dominant psychology, in this case the downtrend, you're going to actually feel like you're going against a trend, but really you're going against near-term momentum and you're trading with the larger trend. This is the way you want to be a world-class trend follower. Now let's take it to a shorter time frame. This is something that we did today in the futures room. So we know we have this bearish psychology on the end of day. We had this very strong CPI number and heightened expectation for maybe even a 0.5 point hike in March. All of that should spell weaker equities. Instead, what we had was a market that launched higher right off the bell and landed us in the resistance of our hourly price movement range, our volatility resistance. Along with that, beautiful confirmation from the V-score, and that was the short. Now, we took the profit as we went from one end of the HPMR to the other, but what do? Well, we scale out. We don't get flat. We keep a scalable mindset. We scale in, we scale out. And that left half of our position open with an unrealized profit, just sort of, yes, it was a little boring. And yes, the profit either expanded a little bit or contracted, but we never went negative on the trade. That's so important. Then what happened? Well, no one can foresee this, but we were prepared. We knew that the overall direction of the market has been bearish, and there is actually from 14,970 to basically 14,670, 680. Yeah, we had a 300 point move in the NASDAQ at $20 per point. And sure, that might have been at half size, but 300 point move at $20 per point. This is the reason that with proper trade management, not just proper risk management, but proper trade management, we can put ourselves in a position to benefit from a nice potential 6K. This is per E-mini in the NASDAQ. Again, you can see where we traded down from 14,970, that range that was kind of where we were moving sideways after scaling out of half the position. down to, and this market kept right on going, but this is just the initial surge to the downside. All of this jives perfectly with the larger short position that we alerted and entered yesterday. So I like to mention everything. If you're a member, you know this because I sent the alerts out. If you're in the options room or in the futures room, these were discussions had and alerts sent. And then the intraday trade syncs up nicely, dovetails perfectly with this bigger bias. So ask yourself, are you working with the market or are you fighting it? This is what it feels like to trade with a trend. Even though it's a downtrend, it's very tradable. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.